Hello and welcome back, everybody, to another live.
Hey
Uh,
guys.
s- Welcoming Nick here. So we're gonna dive into some S&P 500 updates here. We have a little bit of a bounce yesterday that got quite a lot of people excited. So we're gonna take a look at that. As you probably saw from the title of this video, we're not that convinced about how durable this bounce is going to be, and we're going to shed some light into what we're doing with our strategy at Bravos Research with our trades and how we're looking at those. Um, we're also going to take a look at a few sectors. We're going to look at the internals of the market today, dive a little bit into the various different parts of the market and their behavior to see if there's opportunity, uh, where there are opportunities, and overall the general underlying structure of the market and what we should expect looking over the next few weeks. So yeah, going to be some very important things that we're going to talk about today. I'm going to share my screen here. All right, XME. Start with the S&P 500's technicals that, as I mentioned, bounced here off of that support. Now we talked about that with our members yesterday. Overall, it seems the structure, the general structure, yes, it was a very nice, powerful bounce, but the general technical structure is intact. We're just ranging here. We have lots of overhead resistance at this 6750 level, and this seems so far like a mechanical bounce off of a support level. So it's not like we're seeing this very surprising demand and very forceful driving force that's pushing the market higher to past resistance. No, this for now, just observing the technicals is it's very important to keep a very objective, unbiased look at the price action. We're just seeing a mechanical bounce off of this key 6,500 point level, and no real sign of the market from a technical standpoint being able to clear that zone of resistance here, where there's clearly selling pressure coming in every time the market is coming in at that 6750 level. So it's going to be interesting. Perhaps the market is able to actually cross that. We currently have a short position on the market right now, and we have not covered that position. It's still active, and we're updating our clients step by step on that position on the website. But yeah, so overall, we think the likelihood of more downside on the market here is significant, and so we're keeping that short. Um, and we'll talk about our profit taking strategy in just a second. But yeah, I don't know if you had some additional comments on this, Nick.
Yeah, so just something that I want to emphasize here, which is in environments like this, you got to exercise patience. When you see volatility spikes like this, where you get a monster rally like yesterday, and a lot of people are calling for the bear market to be over, um, or you get a sharp drop like we did the other day, and everyone's talking about how a crash is on the way. Like that's all normal, and volatility kind of messes with everyone's emotions, but this is where stepping back and looking at the structure really matters. We're still making lower highs and lower lows, and the trend is still down. And until that changes, there really isn't much reason to overreact or to try and front run the next big move. So the goal right now is to not just get whipsawed around by emotion, not to just try and flip bullish on every green day or panic on the red days. It's just respecting the technicals, respecting the trend, and let the market show its hand before you start making any major decisions.
Yeah, absolutely. And one additional comment for those of you who want to follow that short position, we have lots of other trades on the market, lots of long trades. We're going to talk about the opportunities that we're seeing on the stock market right now, mostly in healthcare. Lots of crazy opportunities in healthcare right now breaking out. We're going to take a look at some of those. But those of you interested in those trades or the short trade, we're doing what we did last time that I think a lot of people appreciated is an exclusive live discount on our service. So we're currently doing Black Friday, so there's a 40% discount on our service, on our trading service, where we give you access to all of our trades with live alerts, right? So we send you an alert, you receive an email notification that says that we're buying a certain stock at a certain weight with a certain price target and a certain stop loss. And we explain the reasoning why we're initiating that trade, whether that's in the alert or in other videos that we'll post to explain our overall strategy. And so that's essentially our service, and it's what we've been working on for years now, optimizing our trading strategy to make sure that we're providing the highest quality trade ideas with the most significant upside while being able to manage our risk systematically and grow our capital over time. And we've been doing that quarter by quarter on a very systematic basis. And in these moments like today, where the market is vulnerable to moving down, it's very important that we stay defensive. We stay on the lookout for opportunities in sectors that are looking great, but also we hedge our bets through, for example, a short bet on the stock market. So you'll see that there's 40% discount on the Black Friday offer. But if you click on the link down below, I believe there's a even deeper discount for this live. So we'll get back into the video now, and I wanted to show you a different chart here. So let me share another screen. Sorry, stop this screen, and then I can share this. And a signal just triggered, a cluster of signals just triggered, called the Hindenburg omen. Now, for those of you who don't know what that is, the Hindenburg omen is an indicator of breadth of the market. And when it triggers, it suggests there is a split in the market. And it's quite an extreme split that's required in order to trigger the Hindenburg omen. And typically that's not a great sign, right? We've talked about this extensively, the fact that the market, in order for the market to rise, you need a lot of stocks to be participating in a move. When the Hindenburg omen actually triggers, it means the market is moving higher, but a big chunk of the rest of the market is actually moving lower. And when it triggers alone, when you have one or two triggers, it's not that big of a deal that can happen. But when you have a cluster of signals, that's how this indicator actually works. It's typically not a great sign. It's typically a sign of broader underlying weakness that's taking place. And so, as you can see, we had a cluster of signals here on the Hindenburg omen. And obviously that's been so far followed by weakness, but it does speak to the possibility of additional downside, and the fact that there is that we have a market that's structurally weak today. And when you zoom out a little bit further, right, you zoom out to 2017 here, 2018, you had a couple other moments here where you had real clusters of signals, including here in 2020, you had a cluster of signals right at the peak of the COVID market, right before the 35% crash in the market here. Now, obviously, we're not seeing another pandemic, but it speaks to the fact that the S&P 500 index was not yet reacting to the reality of the pandemic by February of 2020, and yet certain parts of the market, certain very vulnerable parts of the market, were already getting sold very aggressively. And so that was that split that we're talking about that eventually gave in to a much more broad sell-off. That also happened in 2018. right here as the market was inching to all-time highs. Lots and lots of parts of the market were actually moving down, triggering that Hindenburg omen once again, that ultimately led to a 20% drop in the market. So now, again, we're not necessarily calling for a 20% decline here, but it does speak to the setup that we've had that's been building now for quite a long time now. We've talking about this weakness since October, and as you can see, the first real signals on the Hindenburg omen started in October, and that's been, so it's been building for a couple months now, that we've had this structural weakness in the market, that speaks to the possibility again of additional downside. So yeah, I don't know if Nick, you wanted to jump in here.
Yeah. So with regards to the Hindenburg or omen, like it's a great tool to use for context, and it's something that we're looking at. But just because we see this signal, doesn't mean that we're necessarily panicking or we're trying to scale completely out of the market. We're just looking to get a little bit more defensive, and stick with the sectors that are showing strength. Because historically, when the market is in these conditions, it typically becomes a lot less forgiving. You'll notice more good setups fail.
Yeah.
Breakouts don't really follow through, and trends typically get a little bit choppier here, which is usually a difficult environment to trade in. So this isn't necessarily, we're calling the crash, but this is a moment that we don't want to be pushing the gas pedal and being ultra aggressive. We don't want to be forcing trades in this environment. It's more of a heads up that the environment is shifting, and we just need to stay selective and patient.
Yeah, absolutely, and that does speak to our particular trading strategy. And I think there are definitely other trading styles out there that are successful, that can be successful. This is what we found to have the most success in markets. That allows you to manage your risk, to have the least drawdowns when you have these periods of volatility, when everybody's going nuts on the slightest down day, and we're just on the sidelines looking at, scanning for opportunities, waiting for things to cool down, and seeing what setups actually emerge out of this period of volatility. We're very, very comfortable. It's extremely stress-free as well, right? Because being defensive as soon as things are starting to get shaky, you take all responsibility off of your shoulders, and you're not fighting the trend. You're not hoping for the market to turn around. You're just going with the flow and staying exposed to the sectors that are working, and not doubling down on things that are not working. And that's so it's ironic that the most stress-free, it's not ironic, but that's how it works. The most stress-free path in trading is often the one that's going to lead the most success, because without that stress, without that element of fear and panic, you're going to make better decisions. You're going to be able to manage your risk properly. You're going to be able to be a lot more disciplined, methodical on how you trade. And so that speaks to the Hindenburg omen. It's not only just, as Nick pointed out, it's not just a great timing tool for the market, but it also speaks to the environment that you're in. And today we're just not in that great of environment, whether that's technical. And again, we're going to come back very quickly to the chart of the S&P 500 here. We're not only in a bad posture from a technical standpoint, as the market is clearly no longer in an uptrend, right? Look at that change in character. Up, higher highs, higher lows, and all of a sudden, lower highs, lower lows, right? So it's not rocket science. It's not rocket science. It's actually very simple. It's just that most people are not willing to, or don't really understand how you can remain objective, and how you can completely detach yourself from trying to be right and trying to predict. Just go with the flow, right? And that's what our trading strategy is about. And there is, again, quite often, and this is not a prediction, right? Going back to not wanting to predict, this is not a prediction, but it's definitely increasing in probability as days go by, and as we're seeing this price action, the possibility of a larger flush is there, right? In this current structure, the possibility of a big volatile move is definitely there with lots of pain. And a good example of that was actually July and August of 2024, that I think is very, very similar in terms of, especially in terms of the technicals, and also the leadership here was quite similar. Big euphoric move on tech in May, June, July of 24. Lots of people getting very, very excited about tech stocks here. Ended in kind of a blow off top, and then you start to see a little bit of a shift. This went a lot quicker, but a little bit of a shift in the structure, and ultimately, when that final level gave in right here, you had that flush, right? So it's very slow and steady, and you have a slow deterioration, and then all of a sudden you have that big volatile move that wipes everybody out, and that's when the bottom occurs. So that we haven't really seen that really painful capitulation move that often takes place when you have this type of structural weakness. You have that type of big volatile spike that just stops everybody out, right? And shakes out all of the positive sentiment before you get that bottom, and the market's ready to resume higher. So we're still around this zone in terms of the technicals and also the internals. And if that 6,500 point level gives in, that would be a clear technical breakdown, and that could start to get a little bit uglier in terms of the potential volatility of the move that would follow from that. Yeah. So yeah, that's in regards to the S&P 500 technicals. Now we're going to dive into our trades here, in how we're looking at trades. We're not going to look at specifically what our trades are, because that's for the members that are on the website, that you actually get access to all of the trades that we currently have, with the weights and all of that. So if you want that, again, there's the discount below. But we're going to look at the sectors where we're scanning and where we're looking for exposure to, and the sectors that we're not looking for exposure to. So let me first, before we dive into that, let me first show you let me show you our closed trades, just so that you have an idea of what our strategy has been throughout 2025. So here we have a good chunk of, well, not all of our closed trades on the website. And so you have a good idea of what we've been doing here over the last, in the first 3 quarters of 2025. And UGL is a leveraged gold trade. Orla is a gold mining company. AEM is a gold mining company. So you'll find that AEM, again, silver, obviously a precious metal correlated to gold. So a good chunk of the returns, and a lot of these were very, very successful trades, 16%, 20%. A lot of these were 27% here on UGL. So a lot of the good trades that we had in 2025 were around golds. So that was a big part of what was driving our returns throughout the majority of this year. Now, we talked about why gold seems to be a little bit overextended, and that seems to be lacking runway for us. The other big theme that we had was AI stocks, right? We had ACMR, semiconductor company, ASML, semiconductor company. MLI was an industrial stock that was a little bit different. Google, AI, obviously it's a mega cap stock that's not directly related to AI, but their investments in AI are massive, and so they're definitely benefiting from that tailwind. We had a big trade on Google earlier this year. And then we had a couple of failed attempts, of course, with limited losses, right? Again, always making sure that we're limiting our losses. But the point that I'm trying to make is that one of the big things that we've been trying to ride as much as possible is the AI and the tech theme, because that's been the part of the market with the biggest tailwinds. And if you take a look at what the tech sector looks like today, let me remove let me take a look at the tech sector right here. The tech sector, while it did look very, very strong throughout, well, ever since the low in April, systematically climbing higher, the change in character that we're seeing here is enough for us to say, hey, AI stocks, they're great, and there's a fundamental thesis for them to continue higher, but we want to see evidence of this period of pain, this period of pessimism coming to an end before we jump back in more seriously in the AI stock. So let's take a look at a couple of other sectors to see where the momentum is right now. And I think that's going to be hopefully as valuable for you guys, even if you don't have the actual trades, that you can actually understand where to look for opportunities. XLF, this is the financial sector. Just very quickly, you don't even have to draw any lines. You don't have to even look at the moving averages. You can just see the rollover in the price action, right? Trading is not rocket science, right? You don't have to have a bunch of complicated indicators all over the place. You don't have to have 50 different types of moving averages to try and figure out the price. Yes, you can use these to your advantage, and that's something that we do, of course, to set price targets, to know when to take profits, to kind of optimize our entries and our exits. We use these tools, as we try to do it as simply as possible. We do use these tools, but overall, a big chunk of trading is about just understanding when you want to be stepping in and getting aggressive, when you don't want to be stepping in and getting aggressive, and instead getting defensive, and being able to spot the charts that look good versus the ones that don't. Again, it's very, very simple here. That on XLF, there's a little bit of a topping process that has taken place here, and we've gotten a breakdown earlier in November. We're just retesting that for now. It's really not a great setup here. XLF looks like it's testing resistance and rolling over. Not a great sign. Take a look at XLY, which is the consumer discretionary sector, right? So all of these, by the way, have a bunch of stocks. So what we do when we're scanning for opportunities in the market is we're diving into these sectors. First of all, we take a look at the structure of each sector, right? We take a look at the technicals and the general momentum, and then if we find a sector that we do like, we'll look at the holdings, and we'll analyze the stocks from a technical standpoint, from a fundamental standpoint, and understand what kind of bet each stock is. And then, if we like a certain stock and we think it's a great entry, then we'll initiate a trade, right? And so that's our process. That's why we pay a lot of attention to these sectors. And again, consumer discretionary, lots of stocks within the consumer discretionary sector. It's not looking great, right? Slightly different to XLF, which is the financial sector, but also not looking great. Definitely a bit of a breakdown that's happening here below key resistance, key support that was support here throughout October. It held, and then it's broken back down, retested, and it's entirely possible that we see some selling pressure come here. And there's also a resistance here that's also relevant at that 232.5 level. So there's a resistance zone here. We've had a period of distribution, then we have a breakdown. Now we're just retesting. There's a little bit of optimism, but overall, when you look at these sectors, a lot of these are just seeing a retest of key levels of resistance where you could see very much sellers come back into control. If you see on the other hand a big breakout like this, that starts to look a little bit different, right? And maybe we'll start to look at the market a little bit differently, especially if that's spread out across different sectors. So XLY, XLF don't look good. These are cyclical sectors that speak to the strength of the economy. Not a great sign to see these parts underperform. XLI, which is the industrial sector, very similar. Let me remove these lines. Very similar here, breakdown below kind of distribution that started really in July, right here. So not a great sign to see that. So I'm saying a lot of bad things about the market right now. So what is working? Where are what are the sectors that are looking good and where we are looking for opportunities? So let's take a look at that. Perhaps, I don't know if Nick, you wanted to highlight something on one of these sectors.
Nothing specific, but just just that with regards to like our trading philosophy, just to keep it really simple, we're not trying to fight the price action, and we want to just continue to follow the path of least resistance. And if the charts are coming down, we don't want to be trying to fight that. We want to just be following the path of least resistance and look for charts that have constructive setups. And these are clearly not constructive setups from a long standpoint. And so that's obviously not an area that we're looking for.
Right. Yeah. And again, just speaking to the technicals, a lot of people are often surprised by the way we draw trend lines. And again, there are setups where we'll look at price channels in a little bit more detail. And here I'm just sketching things quite quickly. I'm not, just for explanation reasons. But it does speak to the simplicity of how simple trading can be. Yes, a lot of people fail in trading. Yes, a lot of people don't even suffer from large losses, right? But just because a lot of people fail doesn't mean that it necessarily needs to be extremely complicated. And that's, in fact, I believe one of the big reasons for why a lot of people fail is because they believe that trading is somehow extremely complicated, that it requires complex calculations, extreme indicators all over the place. But in reality, it's really about making the right decisions, being objective regarding the price action and what's in front of you. And the trades that I mentioned earlier, so let me share that again here. All of these trades here, right? A lot of them are just based on very simple analysis, right? And you can make 18, 20% gains. And a lot of these can run higher, by the way. A lot of these trade ideas that we provide do run for 30, 40% gains. The reason that we don't necessarily let them run for that long is because we're trying to rotate as quickly as possible. You can see we have 99 winning trades so far in 2025. That's significant, right? It's a lot of rotation, right? You're rotating your capital into ideas that are winning, and either they quickly win, they quickly get jump up by 20%, or they quickly lose and you quickly cut your loss by 4 or 5%, and you get onto the next one and you rotate. That's how you generate really strong returns in the market.
And
right?
even then, like to your point, there have been multiple times throughout 2025 where we were in gold and in gold stocks. We'll ride up a certain stock or a certain asset until it no longer looks, constructive. And then if it, balances from those highs or consolidates and then breaks out again, then we're absolutely looking to rotate back into those assets. So Just because you sell something doesn't mean it gets thrown right off your watch list. It's just it's no longer constructive. And you'll see if you look at gold and you go and follow where we sold, a lot of these sells were at local tops. Um, so we're just waiting for price to become overextended or for a major resistance or something like that. And then we scale out, but we continue to watch if the macro and the technicals all still point in the same direction.
Right. Yeah, absolutely. And just by the way, yeah, we didn't have that up at the beginning of this live, so you can see on the screen here live only discount, and it'll only last as long as this for an hour and a half. So during the duration of this live, although we won't be doing this live for a full hour, but yes, if you want to have access to that live only discount, make sure to click on the link down below, and you can subscribe to get all of these trades and learn how we do it with us step by step. We go through all of this with you on the website. So let's dive into the parts of the market that are working. So let me share my screen to show you a part of the market that is working, which is, first of all, XME. This is the metals and mining sector. And yes, it's come down a little bit recently, but when you zoom out, it's in a tremendously strong technical posture. Longer term, you can see large basing pattern that's been developing since 2011, so 10 years in the making. And here we have this longer term breakout. So the sellers, longer term sellers, capital just rotating in massive amounts out of this sector. All of a sudden, the selling pressure completely cooled off, and buying strong enough to actually push this out into a long-term breakout to all-time highs. So this is one of the sectors that we're very much looking for a resumption, and we have certain trades within the metals and mining sector that look good, and that could begin to stage a catch up to the gold and silver miners that did melt up a lot more than this that has a higher component of copper, aluminium, and other ores, and miners that are not just in the precious metal sector. And so this is a potential resumption play after a very long-term breakout that could be there. But again, in the near term, you can see, yes, we're in a broader structure, and yes, this is just a short-term pullback. In the near term, you can see price is heading lower, right? So we're not yet looking for this one. We're looking for a basing type of zone, and then we'll perhaps catch some trades or even XME as it resumes out of this period of consolidation. Another great sector, and this is a part of the market that we have talked about already a few times in the recent lives, and that we have doubled down on with trades on the website. Most of our trades right now are on this sector. It is the healthcare sector. Healthcare broke out, XLV broke out here above this kind of shorter term basing pattern, but the price action since has been very, very strong, right? Crossing yet another key resistance level, and then it made this kind of bull flag type of pattern, and then another breakout yet again to now new all-time high. So this is a sector that has significant momentum right now, and that we're just riding, right? Now we did initiate a lot of the trades earlier, and so we've been able to benefit from some of that. Now it's perhaps running off. So this is still very much on our radar, and we're scanning for stocks within that sector. But in terms of actually going long on the healthcare sector itself, that perhaps is not the best deal right now. But when you have a sector as a whole that's witnessing so much upwards pressure, you're going to have more and more trades that are participating in that rally and that are actually getting pushed up by the momentum of that sector. And we initiated a trade. I'll give a sneak peek on one of our trades, which is STE, that we did initiate a trade on around here, as this is a stock in the healthcare sector that has been able to break out above a nice basing pattern here. So very simple technical analysis. Again, we're not getting overly complicated. We're just looking at what the structure is and what the key levels are. We want to keep it simple because we want to know precisely when we're wrong and when we're right. And if there's too many indicators all over the place, if there's too much analysis, first of all, you might never take the trade because all of your indicators are pointing all over the place, and so you don't know, you never have a real signal. And then also you won't manage your risk in an efficient way if you're looking at 6 different indicators and 3 of them are flashing green, 3 of them are flashing red, then what do you do? And that can lead you to, again, poor decision making. In terms of fundamentals, we looked at the fundamentals of this company. That's looking it's looking strong. It's growing its earnings very nicely. And again, it's benefiting from the tailwinds of the healthcare sector that's breaking out. And it's also breaking out to new all-time highs. This is a stock that is emerging out of a trend, a horizontal resistance at $253, roughly $253. And very, very nice breakout here on earnings. On earnings here. So this was the earnings released. Big, nice, powerful breakout. And so far, retest resumption. And we're looking for this to run higher. And this is a stock, by the way, with good track record of being able to actually run higher. So this is another thing that we often look at is how is the track record of profitability from a fundamental standpoint. Is this a company that has been able to, in the past, experience these lengthy periods and powerful periods of earnings growth? If it's done so in the past, there's a higher likelihood that it's going to be able to do that in the future. So that's one of the things that we like about trades that we initiate is looking at the past price action and the price, the past earnings releases and general growth trajectory. And so, yeah, this is a company that has a very, very strong historical track record of growth, and it's stagnated here since 2022 in a tough macro environment, but it seems to be, from a technical standpoint, emerging out of this period of stagnation. So this is a very, very nice setup on STE. XLV, the healthcare sector, looks great, but there's also another part of the healthcare sector that's looking good, which is the healthcare services ETF, XHS. And you can see this is a little bit different in terms of the technical structure, but look at this. What a breakout here. Massive, massive breakout on the healthcare services sector above this key trend line, this key horizontal resistance. So again, very, very simple stuff, right? Not rocket science. We're just looking at key levels and the type of price action that we're getting. Price is going to tell you all you need to know about a certain sector, a certain stock. And so here, clearly experiencing a lot of relative strength here, despite the market declining, right? This is very interesting to note, because when you have, quite often, the healthcare services sector will decline with the rest of the market, right? That's often the case, but sometimes it doesn't. And in this recent move, this has been melting up and breaking out despite the weakness in the market, which is a very good sign, right? What happens if the market begins to move higher? Well, you're going to see even more of a powerful force on the healthcare services as people pile onto this sector that's experiencing macro fundamental tailwinds. And so we have some trades in the XHS that's on our watch list. right now that we'll be covering tomorrow with our premium members on the website. So tune in for that if you're a member. If you're not a member and you want to see what those trades are, again, there's the discount that you'll find below for the exclusive live discount Black Friday offer. Okay, final sector that I think is worth taking a look at is XBI. This is a little bit less of an opportunity today because you can see this is a sector that's been melting up, right? XBI being biotech. So biotechnology stocks, again, different, along the same lines, kind of defensive companies that are uncorrelated. They're not cyclical companies, right? So their earnings are very uncorrelated to the rest of the economy. They're much more based on interest rates, right? When interest rates go down, healthcare stocks do well, like during the pandemic, and when interest rates rise, they fall, right? You have, for example, a very strong correlation, inverse correlation with the 10-year yield that you can see here. If I invert the 10-year yield, you can see that there's a very strong correlation between the XBI, the biotech sector, and the interest rates. The reason for that is because a lot of these companies are highly indebted because they have big projects and they need to take on a lot of that. And so their cash flows depend a lot on what interest rates are doing in the economy. This is the summary of what this sector trades on. But as you can see, this is a sector that has been melting up here. So perhaps even pricing in lower interest rates, something that's worth noting. And has been one of the most interesting areas to be exposed to. In fact, we had a trade on NTRA that we just closed because, again, we want to be capturing the meat of the move, right? So we're not looking to time the exact peak, not looking to time the exact bottom. We're looking for a really good entry with a safe risk versus reward, and we're looking to capture as much of that as we can until price gets overextended and we think that the risk reward is no longer worth it, and then we exit that position and we rotate into other opportunities, right? That's our, again, rotation. Not looking to be a hero and get that 100x trade, but through that 20%, those 20% gains, 20% gains, 20% gains, you can build real wealth. You can build real capital in financial markets. And that's how, the most successful traders in history have built their wealth is through that type of strategy. So XBI getting overextended, which is one of the reasons why we closed our position on NTRA, which is a biotech stock that we initiated right here. Again, very simple. Breakout to new all-time highs. This was a breakout, yes, to new all-time highs after a nice basing pattern here. Very, very strong, fundamentally backed breakout that led to a very quick 25-30% move up. And we just closed that position for roughly a 30% move. So again, taking advantage of not only the tailwind of the XBI sector that's been outperforming, but also just selecting the best stock within XBI that we thought looked good. So that was a good trade for us recently, despite the volatility in the market. So yeah, I don't know if Nick, you wanted to jump in here.
Yeah, just to add a little bit of extra context here with the sector landscape. This kind of rotation is actually one of the reasons why we think the pullback in the S&P 500, if it were to continue, is likely to stay relatively shallow, because in a real larger scale correction, you don't get, this kind of rotation where you'll see a lot of things tend to pull back together and there won't be a real safe place to hide. But that's not what we're seeing right here. Right now, even with tech and financials and industrials, as we talked about, have been losing momentum. You have your healthcare sectors, your biotech, utilities, and a handful of other groups stepping up with fresh breakouts, clean technical structures, and that's telling us that capital isn't leaving the market, so to speak. It's more or less moving around inside of it. So this is exactly an environment where active trading really shines, because when your leadership shifts, you're not stuck holding the old winners as they start to lag. You're able to pivot. You can focus on the pockets of strength instead of riding the pullbacks in the areas that are weakening. So while right now the big mega cap names have started to cool, we're still finding plenty of setups in these stronger sectors, and being able to move within that rotation and keeping your capital pointed at what's actually working is one of the best ways to outperform the broad market during these transition phases.
Yeah, absolutely. And by the way, there are moments where everything is just falling, right? And there are no opportunities. So right now, yes, this is an environment where the market, again, going back to the Hindenburg omen, the market is split. There's parts of the market that are working, parts that are not working. And so in this type of environment, if you're exposed to the parts that are working, you're doing well. You're continuing to generate returns. But certain moments you have just generally poor conditions across the board, and 2022 was a good example of that. The S&P 500 was falling, but defensive sectors were falling, like XBI, XLV was generally falling, or at least experienced a lot of volatility during that 2022 bear market. Even gold was underperforming. Treasury bonds were underperforming. I believe the only part of the market that was doing okay there was the energy sector, and even then, it did experience quite a bit of volatility in the third quarter of 2022. But yes, there are just moments where you're going to want to be 100% cash, and there's not going to be opportunities, and the charts are going to tell you when those moments are, and we do our best to try and inform you. We keep our clients updated 3 times a week on what we see on these sectors, on different trades, on the market in general, what our mindset is, what trades, what entry points we're looking at for each trade, what exit strategy we're looking at. So giving updates every step of the way on each trade. If that's a service that you're interested in, again, the link is down below to get that big Black Friday /live discount that we're doing. It's not going to last after this live. So if you want it, you can take advantage of it during this live to get an additional discount on the service. So yeah, I think that was all that we wanted to cover in this video. If we'll do a quick Q&A session for in regards to the membership, because I know a lot of people have questions. We'll be joined by my co-founder Edward to answer some of your questions. There you go. Hi, Edward.
Hi, everyone. Thank you, Peter and Nick, for this market update. It was really good. I hope you guys enjoyed it. Please don't hesitate to share some feedback for us in the comments. That's always very helpful. I want to confirm that this is a live only discount, as Peter said. It is expiring in an hour. So if we're never to do this types of discounts at another time. So if you're looking to join, Black Friday is always a really great time to lock in savings. So please click the link below. Yep. If you were looking to join. That's a great time. Yeah, Peter, I think one of the questions I saw earlier in the live was to explain if you could just go over what exactly you can expect with the macro membership. And you talked about the trade alerts, but we also have premium videos for clients, which is something that's very appreciated from clients. If you could quickly go over what's included in that and what people can expect.
Yes. So yeah, absolutely. The premium videos we post 3 times a week. They're 20 to 30 minute episodes that we prepare in advance to try and cover as many aspects of financial markets as we can. We brush over the key assets that we believe are interesting and relevant at that particular moment. We brush over sectors and what they look like we did in this video. But also we try and give as much of a glimpse as possible in regards to the macro environment and where we stand from a macroeconomic standpoint and where we believe the market is going. I think that's a big part of what a lot of our clients are looking for. Is they're very there's a lot of noise out there regarding where the economy is going, where the markets are going. We're going to see a crash, imminent crash, or a Great Depression, and what should be our mindset in regards to all of that. And we try and paint as clear of a picture as we can regarding where we stand from a macro standpoint and how to take advantage of that in markets. And again, we do that cross asset. So it's not just stocks. We've talked about stocks today, but we do trade gold. We trade commodities like oil, natural gas. Wherever we see opportunities, we'll trade it. Wherever we see risk reward, we'll trade it. We trade cryptocurrencies, of course. You'll see right here, I see on our close trades, I see Ethereum. We trade Solana, Bitcoin. Mostly we stick to the large cap cryptos because a lot of the smaller cryptos obviously have liquidity problems that we want to avoid, because a lot of people do participate in the trades that we make. So we want liquidity. And crypto, at the end of the day, we're not getting involved in the tokenomics and the specific details of each project. We understand crypto and how crypto fits in the context of the macro economy, in context of the financial markets. And when we see there's sometimes crypto is interesting and sometimes it's not, right? So when it's not interesting, like today, we stay away from it. And we just watch. We keep a close eye on it. We update our members on it. But when it gets interesting, when it's bottoming or even resuming out, which could happen, over the next few weeks, few months, we want to get in on it. So it's really a membership that's macro, in the sense that we're covering all assets across the board wherever we see opportunities. And so the premium videos, the 3 premium videos, are designed to give as much context regarding why we make the trades that we make. And so the trade alerts and the premium videos go hand in hand. And that's really a product that we've gotten a lot of feedback, and we've interacted a lot with our clients. And that's the most optimal combo that we found actually helps people out, is the live alerts with precise entries and exits, showcasing our exact portfolio of trades, and combined with regular episodes of context, strategy, and forward guidance regarding what we're expecting and what we think is most optimal.
Yeah, thank you for that, Peter. I think that's a great rundown. And to what you said regarding our trade alerts, I want to clarify that they are sent live by email, and we have an app as well where you can get the push notifications for these trades. I did see a comment regarding short trades. Yes, we do short trades. Most of the short trades that we actually take are using inverse ETFs.
Yeah.
So we actually go long. We go long inverse ETFs, but we do go short. So that's actually the way that we went short the market, short the S&P. It's through inverse ETF. We always try to use the instruments that are more accessible on most of our brokers.
Yeah.
So yeah, I think that covers most of the questions that we had noted down from the live. I also just want to reconfirm that we do have it is a 50% discount here for the live. I know that people might be confused here with the 40% off that you see, but the price is actually discounted by 50%. And so that means that you actually secure the membership at $75 per month for a year instead of our regular pricing of $250 per month on the monthly plan. So that's actually a 70% discount relative to our monthly pricing. And so again, as we said, we don't do this type of discounts at another time. So if you were looking to join, Black Friday is a great time to lock in your savings for the year. So yeah, I think we'll wrap up the live stream here. I hope
We'll leave the we'll leave the link active for another hour or so that you guys have if you haven't made your decision yet, you can still have a little bit of time after the live to take advantage of that. But we will this will be live only. So yeah. Thank you for everybody who's.
And if you have any issues or any questions, don't hesitate to shoot an email at our client service team. We work 7 days a week, and we'll be making sure to answer any questions you might have on the service or whatever we provide. So yeah, thank you everyone, and see you next time.
Yep. Thank you. Great session.